This is Jason, aka Junky. Hope this video finds you doing well. It is Saturday, February the 2nd, 2019. This is going to be a weekly wrap up for the stock market ending, I guess on February the 1st. And I had a eureka moment on the S&P 500, and I want to show you what I found. All right, now with this video, I love you guys and everything, but I think I'm only going to make this video one time. And I could be wrong, okay? I'll put a disclaimer out here, and I'm not giving any financial advice. And I could definitely 100% be wrong, okay? But in reviewing the charts for my live, when I went live earlier in the week, I was kind of just looking at the chart, and I'm not a fundamentalist. So I don't typically look at really, really long time frames. I trade the market one section at a time. That's my goal. And I use monthly and weekly charts so that I can orientate myself within the price structure, but I'm not really looking at the long-term trend, which is why I don't really use moving averages, because if you're looking at it section by section, wave by wave, I don't need the market to tell me what the trend is. But, I think those indicators are better for longer term trends, but, and just for comparative purposes to find out how price is away from the mean. But without getting too deep into that, I noticed something on the charts in S&P, and it's pretty interesting, and I'm going to go through it, and I'm going to show you where we're at and what I think is going on here and what's possible here. And I'm only going to make this video one time, and it's for very selfish reasons. No one watches these videos right now. I think my subscribership that I had previously, we were following a bunch of Bitcoin transaction-based stuff, and Bitcoin was booming at the time, and there was a lot of intrigue in the channel. Now we're just talking about trading. And, some people are kind of turned off to the investing at all. Some of them might just be turned off to me, whatever. But no one's really watching these videos. Not very many people, this is on my mind. So I'm going to get it out. But I'm not going to talk about it much going forward, because I want to take advantage of this opportunity. And if I had too many people watching the video, there might be other people that want to take advantage of the opportunity, right? So we don't want to give out all the secrets. So the select few that are actually watching the video, really think about what I show you here today, okay? All right, so I've been telling everybody, if you've been watching the videos, that, I think we're in a sell zone where we've met a serious amount of resistance. People say that it's not resistance until the market turns there. No, that's not really correct. It's resistance, but sometimes the resistance fails quickly, and there's no reaction there. But it is there, because historically, the market reacts in these zones. And I can guarantee you, with high-frequency traders and algorithm-based trading setups, these areas have shorts that automatically trigger, just like support areas have longs that automatically trigger. They're there whether the market reacts to them the way we think they will or not. All right, so I identify monthly and weekly resistance. And I want to hurry up and get through this so I can show you what I saw. So identify monthly resistance and weekly resistance. Monthly resistance is the red lines, and the blue lines are the weekly resistance, that as I identify them based on my analysis of the chart. Okay, so we're at an area where we're at weekly resistance, in my opinion, and monthly resistance is right on top of it. So right here, from here basically to here, is all resistance. So I'd be very wary to sell in this zone. Now, I said the other day that I felt like that the way this was setting up, I think I said that maybe on this day here, January 28th. I said the way that the market was setting up, it looked pretty bullish to me, and it followed through, and it did go up, and I said it was probably going to break to the high side. And what I see is it tricking people into believing about the long-term direction could really be up, and it bull trapping a lot of people. And I really think that's going to happen, and I'm going to show you some supporting evidence for that. But in the midst of that, I found some bigger, more concerning issues, right? So that's my stance on SPY. So let's come back to SPY in a second, because SPY, QQQ, IWM, so NASDAQ 100 and Russell, they all pretty much trade the same. The performance is not exactly the same, but it's very similar in the structure of what price is doing, because they're indexes of the entire market, and the market typically moves in tandem. All right, so we'll look at QQQ just for brevity. It's a similar looking chart right here, kind of squeezed together in consolidation, broke to the upside basically on the same day. It's at the same level of retracement based on this daily chart. All right, so it's basically the same chart, just slightly different numbers and performance. Okay, so all right, let's take a look at this. All right, so this is a couple things I want you to see. Let's back up to the weekly chart. Now, I haven't done my weekend or month end adjustments of my levels. So ignore the price levels that are on here because they change every week based on the monthly and weekly. They change every month, based on me reevaluating the monthly chart for support and resistance, and they change every week based on me reevaluating the support resistance on the weekly chart. I mean, as I'm looking at this chart, actually, it's going to be the same support and resistance for both the monthly and the weekly because nothing's changed on SPY. Okay, I can do that. I'm eyeballing it, but they're going to be the exact same. So monthly resistance here, weekly resistance here. All right. So looking at the weekly chart, take a look at this. We came up. I'm looking right here. This is in January of last year. Made a high. We had a drop. I've already measured this. This is it's an 11%. Or no, I think this one's 13. Maybe I should do it now. All right. So this right here was an 11.76% drop, right? So in the bigger picture, as you looked at price going up, this was the very first time that price made a really significant down move other than right here, which was a similar size down move, right? And price came up, and here's your rejection. The very first time after you have a price drop, this is price coming back down for the retest. It tested a low, could not make a new low, went back up, made a new high, okay? So that's the structure that I'm looking at. So what I did is I went back on the chart and I zoomed way out and I tried to find commonality. I'm like, okay, when's the last time that same thing happened? You know, we kind of had it here. Price went up, and I wouldn't say that this really broke the trend line, because I use objective trend lines, time to mark. But if you were to put like just a simple touch type trend line on here, something that's more, I want to ride through this because I have a lot of stuff to show you. I don't know how to draw these trend lines, and I have my magnet on, so it's automatically going to snap to the nearest close. But yeah, like if you just did one of these kind of trend lines like this, where you got three or four touches, you could say that it broke through it there, and then there's the retest, and then it went further up, and then so that's that. But the difference here is once it broke, it didn't come back. It came all the way down and tested, and then it didn't make a new high immediately. It kind of double bottomed and then went up, so it's a little bit different. All right. So that's not really the same thing, and I'll show you another thing when we get to the monthly chart that makes it really not the same. Okay, so then there was here where it happened. The price was going up at a certain level, and then you had this down move here that was kind of different from this trend line if you were to draw one, and then it came down, made a new high, and then dropped lower. Okay, so I'm like, okay, that looks just like what we have here, just a little bit different. This part right here isn't quite the same because the way that the long tail on this, but it's pretty similar. All right, and if you look at this was August of 2007, and it made the new top in October of 2007. So this is a year before the crash, and this right here is the crash of 08. Okay, all right, so this is where it looks most similar, and you can go back through here, back into 2000. There's some other examples, which was the other crash. So let's zoom in. See if I have a cleaner chart. Let's zoom into the monthly chart. All right, and let's make sense of this. And I'll show you something that's really interesting. All right, so this is the 2008 crash. Now, this wasn't where the crash happened because the crash happened in October. So the crash happened on this long red candle here. So the year before, if you measure the move, let's see if I can zoom in a little bit. If you measure the first leg down of that move, it was a 20.01% move. That was the first move. And if you want to see what that looked like on the weekly chart, let's go back and look at it on the weekly chart to make sure that we're talking about the same thing, that I didn't lose you. Okay. So this is on a weekly chart. Remember, it made the low here, and then it actually made a new high here. And then the first leg down is basically from here to right here was 20.01%. Okay. In 2008. All right, let's go back out to the monthly chart. And let's look at our most recent, what's happened with us. here's our leg. So here was the first leg where it came up, it came down 11 or 12%, went up, made a new high. Okay. $20.47%. I looked at some of the other moves along here, and they're 15%, 16%, that kind of thing. This is a 20% move down that really broke. Let's look at the monthly chart. Really broke the trend. Like you kind of got outside of the trend here a little bit, but here we really broke the trend. Our move that we're in right now, 20% here, 20% there. All right. Here's what's interesting. So how far did that move go down? Ultimately, 57.4% over the course of from basically October of 2007 until basically February of 2009 or February or March of 2009. All right. So it was basically not quite 2 years. It went down 57%. Okay. So let's then look at, this is a monthly chart. This move here started, this is the longest bull run in our history. Okay. So if this move was going to have some type of a retracement for the entire move, and no one likes to think of it that way, but retracements are healthy. They reset the market, and it puts price back into equilibrium, because sometimes we can get too far away. And typically you can go back on this chart. Let's look at this. This leg here went from April of 1994 until March of 2000. So you basically had about a 5 to 6 year window. And then the down move went from basically March to October of 2000 to 02. So you had 2 years down. Then your up move started over again from 02 to 07. So you had 5 years up. And then you got this move here. From down here, it started basically September of 07 was the beginning, or October of 07 was the beginning of the down move, including the 08 crash, which ended in February of 09. All right. So typically, if you're looking at this, the bull runs last, 4, 5, 6 years. We've had a 10-year bull run, the biggest in history. The bigger the rise, the bigger the fall, most of the time. All right. Right now, the ultimate low of 98 was 57%. 2008, that was 57%. The dot-com bust in 2000, let's take a look at that, fell 50.52%. Okay? Before it turned back up. So if I was to put a measurement on here, and we have 57 and 50. So let's go in the middle. Let's go 53% drop. A reasonable drop for after a run. 53% puts us down here. Anyone that follows my trading knows that support typically comes in at 60 to 80% of the move. Right? Which would put price directly in that zone with a 53% correction from this spot. So we've got a long-term trend break. We're at support resistance similar to what it looked like at 2008 right here on the first leg. And I'll tell you something that's concerning about us, this compared to 2000 and compared to every other break on this chart. Almost always there's a retest. When you get something that breaks the trend as far as, like right here, when you break the trend as far as this did right here on this candle. Now remember, this is a monthly chart, so price is going up for right here 4 or 5 years, and you break that trend, it bounced back up, but it tested that low again. We have no test. We have no retest yet. None. We've come down here to this low. We haven't been down to retest. So at bare minimum, I think we're going to get a retest, right? But the more fearful thing is that this bull run is finally over. This is the first leg. Everyone's calling a depression, in 2020, 80% probability. Take a look online. Everyone, all the prognosticators and fund managers, they're all calling for the recession next year. And if it has a typical a typical, what's the word that I'm looking for? Correction, 53%, as the past two major corrections have been, it puts us right where it's supposed to be for people to re-enter the market to buy it back up at support. This thing could be going way down. Like, now, let's make a case for the bull side of things, because I could be completely wrong. Let's put an indicator. I don't really use indicators, but for this, for long-term investing and kind of looking at, you know, where the market's going big picture, I think that the indicators are very useful, some of them. All right, so let's go with a 200 moving average. Okay. Typically, pricing, especially in a market with buyers and sellers fighting, to price generally tries to force itself back to a mean, right? So what I use moving averages for is to tell me how far away from the moving average is price, because the further away it is from it, the closer it is to coming back to it. It's an average price. That the calculation is designed to get as close to the price action as possible by being an average. So when your distance from the line is too far, it could mean that you're overbought or oversold. Okay, and that's what a lot of the relative strength index indicators like RSI and your MACDs and even oscillators to some extent, they're all designed based on that concept that you want to keep price close to a mean. And when you get too far away from a mean, it's measuring that. So if you look at how large a gap there is from where price is right now to where the 200 moving average is, it's that combined with the way that the weekly chart looks very similar to the '08 drop, and then the fact that it's broken the trend line and that we're at support, this all kind of suggests to me that we're going to get a really, really large retracement, a really large correction in the market. And I would be very weary buying this up. But let's look at the weekly chart. Here's the bull case. You could say, if looking at the 200, we just came and touched it on a weekly chart. The market's going to see the resistance here. It's going to come back down. They will find support. We'll maintain the 200 and we'll keep going up. So there's the opposite side of that coin. And that's a definite possibility. But the fact that we're 10 years into the bull run and markets never move this far, the fact that our Fed interest rate is so low that we don't really have anywhere to go to stimulate the market, the political unrest we have, the war we're having with trade with China, and all the factors put together, I'm more inclined to think that this is a confluence of events, and we're probably going to see a really big downturn. Now, I'm going to trade whatever's here. And let me also put out there, I don't have a bias. I'm a trader that's on both sides of the market. The market has a buy bias. You know, most people buy stocks that they think are going to raise in value. Not a lot of people are shorting. Active traders, you know, I'm not going to say I don't care, because I want the economy to do good. And when the market's healthy, it's better for the economy. So I want us to succeed. But as far as actively trading it, it's not going to affect me one way or the other, whether we're up or down, because I'm going to trade both ways. So it doesn't really matter. But this screams to me as really big downward move. And a lot of people agree with me, but I didn't think it was going to be. I never really broke it down myself. You know, I've been talking about it. All of my charts have turned bearish, a lot of them. You know, and I told you I've been looking for sales on everything, and I've been looking at all the trades I've been taking. I took a picture of my trade journal the other day, and I put it on the video that I made. If you look at it, there's like one buy on there, and they're all the other sales. And I don't have a bias in the market. I buy or sell whatever the market's telling me to do, but almost everything is telling me to sell. And I could be wrong, you know, and we could punch through this level, and then what happened with that is all my triggers will turn to buys. So I follow whatever the market's doing, but it's actively saying sell. And I think this could be the precursor to this move, to the market moving, and it does that standard 50 or 53% type of a move down. It puts us right at where we're supposed to be. Look at, we're right down at the moving average, and we're right there where support should be. It seems like technically this is a perfect setup for a short. Perfectly. Now, that got me thinking about something else. Bitcoin. my channel was originated on Bitcoin. I'm a little bit Bitcoin obsessed, and I do have a Bitcoin bias. Okay, so I'm trying to be objective about it, but I do have something of a Bitcoin bias. But I started thinking about our economy in the position it's in. This isn't back in 2008. It's not similar because we don't have rates. We don't have rates to lower to bail us out. And the companies that are going to be affected by this are not the banks that are going to affect, housing. And it's just a different dynamic. So the government's probably not going to be able to come in and bail out the depression, which means it won't be as dire as well. I mean, it may fall as further than the previous time, but the effect on the average person walking around would be significantly different than it was when it was all about banks and mortgages and things like that. So it'll be a little bit different. But the bottom line is, when this type of thing happens, people flee to safety, and safety is typically in the form of cash, or safety is in the form of gold, or safety is in the form of some blue chip stocks that people feel will always be there. A Coca-Cola or something like that. Johnson & Johnson, those kind of things, right? Well, I think the last run we had in Bitcoin was to solidify that Bitcoin is an actual asset class. And maybe we were just early. I can imagine there's billions upon billions of dollars that are going to exit this market, and they're going to look for somewhere to go. And all it takes is a few people and to put the money into Bitcoin, and that starts the spike. Bitcoin spikes up to $5,000 or $6,000. There's a point where it's going to go, and people are going to start jumping back in all over again. And they're a lot more trusting of it this time than they will be last time. We have a very short memory. And the ETF is up for verification. CBOE is they just announced, I think with the government shutdown, it slowed down the approval of the Bitcoin ETF, but the ETF is back on the table. That could happen next month. And I'm just looking at the confluence of events that might happen here. We could have a tremendous downside correction in the stock market and simultaneously make Bitcoin available to the broad market to invest in. And all it takes is a small spark. And Bitcoin right now is at $3,500. So my plan, and I had my eureka moment yesterday as I was looking at this, is, because I really feel strongly about the market right now after doing this evaluation, I'm going to start loading up on Bitcoin, guys. I'm not recommending that you do, okay? I'm not, a lot of you are going to say it's not worth anything. It's whatever. I've heard every argument possible since, I like Bitcoin. But I really think I'm not going to sell the farm this time. I didn't last time. I just tried out the trading platforms, but I'm going to actively invest in more Bitcoin. I'm going to try and grab as much as I can over the next year, I think. And we're not going to talk about this again, guys. I'm making the video now. There's probably 80 people that are going to watch it. And, and I'm thinking maybe in 10 years, a couple of you send me an email like, I'm glad that you told us that, back then, because I bought a couple Bitcoin. Now they're worth $500,000, because this is setting up. People don't trust the economy. All fiat currencies in the history of the world, every single time, have traded to zero. Every single time. Okay? So, why did that just pop up? So, right now, this kind of event, a 1-year downturn in stocks is going to put some money in Bitcoin. And we've shown 3 or 4 times now, all it takes is a little bit of a spark and the mania happens. The market goes insane. So, yeah, this is interesting to me. I've never been as convinced that we're about to have a really big downside turn or correction in this market until I actually started looking at these charts and the similarities between this and 2008 and the size of the correction. A drop all the way down to the 130s would be reasonable because the run up was so long. Look at how long this run up was. We've never seen anything like it. Even this impressive run here was 6 years. It's been 10 years straight up. You had a little bit of consolidation here. But I don't know. Now, again, I could be wrong. But I think I'm going to go buy some Bitcoin, y'all. That's what I think. Because I think, where else do you put your money? With the economy, the kind of economic breakdown that we're looking at is going to affect the commodity market. It's going to affect the gas, the energy market. No one, I don't think, is going to be protected this time around. And people are going to look for not high probability, but high yield potential. And Bitcoin's already been to 20,000. So if you look at the chart, it looks like it's on sale at 3,500 under the right conditions. And the market tanking and everybody pulling their money out. Remember, everybody's got a buy bias. 90% of the players in the market are only buying. So you're not going short and making money that way. So they exit out. So an ETF that's active will allow those hedge funds and pension funds and all types of other funds that invest in exchange-based securities the ability to buy into Bitcoin. I mean, personally, I'm going to go buy Bitcoin from everywhere I can starting tomorrow. As every time I get an extra 10 or 20% of risk capital, I think I'm going to start loading up the truck on Bitcoin, because I really think that's the play. That from here, when this collapse starts to happen, people are going to go looking for assets to jump into. And I don't think everyone's going to Bitcoin. I just think with Bitcoin, it only takes a small spark. And the millennials, they love it. And then we're all in. That's how it works. That's how it's worked the last 4 times. Bitcoin was $5 and went to $900 and then all the way back down to $100. That's just what it does. But every time the baseline for the price goes up. And every time that's happened was during the bull run. So people had the alternative to return back to the stock market. But you're not going to have that alternative during this downturn, which is a healthy correction. This is how markets move. There's always a depression and a correction at the end of a bull run. So it's normal. This is what's supposed to happen. But I think the environment sets it up so that Bitcoin is going to be the benefactor of that, because I don't know. I really, that's what I think. So we're not going to talk about this again. Maybe a little bit, because somebody's going to ask me some questions about it, or maybe my excitement for it as it starts to actually happen, I may mention it a little bit, but I don't have any plans to talk about this anymore, because I don't need you guys out there buying up all the Bitcoin before I get some. Okay. So yeah, this is pretty much what I'm thinking. So as far as the market goes, I'm still thinking it's a downward trajectory. We're at a major resistance area, but look at this 200 SMA. I mean, moving average here. We did bounce off of it. We could break the trend to the upside, and we could make new highs. The market is not controlled by anybody. You never know what it's going to do. But I think all the factors are pointing to this is the first leg in a really, really big down move. And I think there's going to be other things that are going to be the benefactors of that move down as the money flees out of the market. So we'll keep watching it next week, see what happens. I have a few open positions now. 1 long, 2 short. Actually, that 1 short I might have stopped out on the 1 short. So yeah, I think I got stopped out on 1 short. I might have 2 positions open. And so we'll see what happens next week. The month was pretty good. I closed at around 58% accuracy for the month. 1.8 average gain versus loss, and it was a decent month. I don't know what the percentage is yet. I haven't done the math on the monthly percentage. Probably around 15 or 17%, something like that. So it was a good month, and we'll see what happens next month. But that's where we're at. I will talk to you guys next week. We'll do a market update sometime early in the week, and then we'll go live again. Follow me on Twitter so you'll know when we're going live, so I can analyze your charts live. And yeah, that's what I'm doing. So if this video was a little bit crazy for people, I'm sorry, but I don't know. I got a little flustered this morning. I felt the FOMO for Bitcoin, and I know no one's saying go buy Bitcoin right now, but as I analyze this chart, I felt personal FOMO for Bitcoin. And I can't believe I let myself forget about it, because last year or 2 years ago, I was so gung-ho about it. And then with all the stuff collapsing and stuff, even I lost my way. But I'm not doing this the right way. I need to go buy some more Bitcoin. Not recommending that you do. I can't give you financial advice at all. I'm just telling you what I'm doing. And I don't sell any products, so don't feel like I'm selling you anything. All right. So anyway, like the video, subscribe to the channel. Stay tuned for the next video, and I will talk to you guys soon. Thanks.